Some great conversations there. A huge thank you to our speakers. Now, coming up next, we're going to gain an insight into the future of trust and transparency in the cryptocurrency space in a discussion led by Cointelegraph's Asia editor and chief Tia Peng. Following that discussion will be TradeStation's Crypto's James Putra and his panel of industry experts who will explore the wants but also the needs of the next wave of digital investors.
Hi, everyone. Thank you, Jessica, for the introduction, and thank you, LA Blockchain Summit, for another invitation. It's great to be back. And hi, everyone. I'm your moderator for today's panel. With the invention of different cryptocurrencies after Bitcoin and possible mainstream adoption heading crypto's way, we see more services provider joining the crypto environment, and also regulators are trying to understand this space and setting up a regulatory framework around it. And questions such as, does my service provider actually hold my assets, become even more interesting in the crypto environment. So here we are having great panelists with research in digital identity, taxation, and law backgrounds to share their thoughts and expertise on how and where the future trust and transparency of crypto is heading to. And before we start our questions, I'd like our panelists here to introduce yourself and of who you are and your background. That'd be great. Chris, would you like to start first?
Yeah, sure. Chris Harding. I'm with Civic. We are a identity solution provider in the crypto industry. My background is I was an auditor for a very long time. I was KPMG for probably about 12 years. So this is a topic that's very familiar to me.
Great, thank you. And Celine, hi. Hello. I don't think I can hear you. Maybe we can go back to you later on. Toby, would you like to go ahead?
Yeah, great. Thanks, Ting. Hi, Tobin McComas. I am with the Chamber of Digital Commerce. We are a trade association with mandate of serving the blockchain and crypto industry with all things regulatory and policy focused in DC. So happy to be here, and thanks for having us part of the conversation.
Cool. Thanks for joining us. And Aaron, hi.
Hi, everybody. Great to be with you today. I'm Aaron Jacob. I work at TaxBit. I head up our ERP solution. TaxBit, we are a technology company providing tax and accounting software for the digital economy. We're serving consumers, governments, and enterprises of all shapes and sizes. So really excited to be here and grateful for the chance to connect.
Cool. Thanks. And Noah, hi. Good to see you again.
Hey, everyone. Noah Buxton. I'm a guy with a background in law and regulation and IT assurance. I'm someone who got pulled down the rabbit hole of Bitcoin in 2016. And so today I consider myself really lucky to be co-founder of the blockchain and digital assets practice here at Armanino, which is a top 25 public accounting firm in the US. And I get to put my passion to work every day now, basically 100% focused on crypto, leading a team of subject matter experts that's doing a lot of traditional accounting type work that this space needs, from audit, tax advisory and compliance, through risk assurance and consulting. But also we're building new products for the space. And so I also consider ourselves very lucky today to have earned a reputation as a global leader in digital assets. One of the unique things that we've done here is develop a platform called Trust Explorer. It was actually the world's first real-time audit. So it was a big deal for the assurance and public accounting space, but also was addressed at a stablecoin use case or crypto use case to begin with. So we're very proud of that. Trust Explorer does many things today, but it's actually in real time. I think it's about, I checked earlier today, something like approaching $28 billion worth of crypto assets that we provide real-time assurance over. So we're edging up on 1% of the total crypto market cap now under real-time attest. And again, very proud of that. Happy to be with you all today and talk about another subject we're passionate about here at the firm, which is proof of reserves and advancement, of these new standards of trust and transparency.
Yeah, talk about the new standard of transparency. You mentioned about, there's new regulatory framework coming up and what you guys have done. Also, it's called the proof of reserves. Can you tell us more about what it is and what's the background? How did you come up with this findings?
Sure. Should we let Celine introduce herself, or? Oh, sorry, she dropped off. Yeah, sure. I can go into that. So I think we've got a lot of smart people on the phone that are coming from or on the line that are coming from different angles around this. So it'll be a great conversation. First off, what is proof of reserves? I don't think still that term is widely used in the space. I don't think it's permeated through sort of every corner of the crypto or digital asset space yet. However, it isn't something new. It's actually from 2014. So in its essence, it's a way that exchanges and other service providers or platforms can provide assurance to their customers that they're adequately reserving crypto assets to meet the liabilities that they owe to those customers. So in shorthand, let's say it's a type of audit. It's a newfangled type of audit. And it's actually a cypherpunk idea to begin with. It was originally conceptualized by Greg Maxwell, who's a Bitcoin core developer, and essentially was an idea that he had around preventing the type of losses that were sustained by users of the Mt. Gox exchange. Essentially, Mt. Gox was hacked over a number of 2 times essentially, but at the end of the day was unable, when there was a run on the bank, was unable to make good on the liabilities in Bitcoin that it had to its customers. And so a lot of people lost significant funds. And this was in a time where there's other activity, that was very pronounced. This hasn't gone away today, right? Like there are still issues with fraud, with theft, with improper management of crypto assets, and we see these things in the headlines periodically. So one thing that's interesting about proof of reserves is I can joke around. It was kind of it's like you can think of it as a vaccine against the scourge of improper accounting and improper reserve practices. It's not really a vaccine, of course, but there is this interesting part of proof of reserves. One of the really unique things, if I just told you proof of reserves is a type of audit for exchanges, you might say, why do I care? That sounds like an audit. That doesn't sound very interesting. The truth is that there's a really interesting component of proof of reserves, which allows the customer or the end holder of the liability to participate in this whole process. And so it is kind of like there's a herd immunity, so to speak. Basically, in a proof of reserves process, you can invite this end consumer to come in and check the exchange. They can individually participate in ensuring that their liability was actually counted in this whole process, assets versus liabilities, and they get to count that they were included. And so it's like a herd immunity. If enough people do this in a proof of reserves process, the chance that the exchange has cheated, so to speak, becomes infinitesimally small. And so it's this interesting check on exchanges.
I'm curious to know what's the difference. When Bitcoin was created and it was meant to be a peer-to-peer payment solution without a third party, confirmation. And this is why we say we put our trust in math. We trust, and then now we have all these different other inventions in crypto, and we are talking about we need third-party auditing companies to look into what's missing, what's going on, and try to regulate it. Isn't kind of controversial to what crypto was meant to be? And how does this proof of reserve work? Is it also blockchain backed, or how does it work?
Yeah, so to your core question around the ethos of Bitcoin, the original spirit of Bitcoin and its peer-to-peer nature, and doesn't this seem like we're just involving a centralized party? Let's say it's Armanino, a big public accounting firm. Why do we need them in the equation? Wasn't that the whole point? So I get that. And I think we need to be frank about the reality that crypto markets, capital markets now, we're seeing the intersection today, right, of traditional finance and capital markets and this alternative universe of crypto and digital assets. And these things are coming together, right? With the largest institutions in the world starting to place capital, large publicly traded companies starting to place capital in these assets. The truth of the matter is that exchanges are the key on-ramps and off-ramps for fiat assets or other sources of capital to come into the digital asset space. And because they're these key gateways, they by necessity have to custody, customers' assets on the way in and the way out. Now, that doesn't mean that you have to keep your coins on the exchange, right? Certainly, there's many people who do that. They want to make some trades and they pull everything off the exchange and self-custody. And then you're back in that original sort of, Bitcoin peer-to-peer, self-custody mode. And that's great. I mean, I fully support that. I think that the original ethos of the space is important. But the reality is that something between 20 and 40% of the total market cap of digital assets today sits with third-party providers. And it does that because institutions, for instance, almost have to use a third-party custodian or exchange provider. And retail chooses to because, frankly, it's easier. So, and then I can answer the second part of your question, but I'll take a breath. I'm sure there's others that want to jump in on that.
I see Celine, you're back. Can you hear us? You're muted though. Hello, can you hear us? I guess she still cannot, has some kind of audio problem here. So yeah, Chris, would you like to make comments on the question?
Yeah, I think the world of crypto has just grown so significantly beyond the point of its initial inception, which was Bitcoin. And you're absolutely right. Like the core principles to Bitcoin was very, very clear in its peer-to-peer nature. I just think the industry has grown so substantially and so many different players have come in that every time somebody new comes in, there's an element of trust that we need to be able to assign to those players. And without, I think, enough control or transparency as to how those trusted parties operate, I think it's always going to be the Wild West, right? I think the industry is kind of slowly growing up to the idea that regulation is absolutely needed, and there's a lot of good to be had by sensible regulation that doesn't necessarily impede innovation, but that does aid in kind of this trust element that we're talking about, right? And help enhance the transparency of how things happen within the industry. And all of that, in my mind, is leading to wider adoption, right? So if your core belief is that this is going to be somewhere and we want to take this to the massive and we want people to use this, people that are not necessarily digitally native or happy to engage with technology that is foreign to them or new, and they don't want to necessarily go through the learning curve of getting up to speed of how to manage my own wallets and how to do transfers, and what if I accidentally send it to the wrong account number or onto the wrong chain and I lose my money. There's a lot of risk in that, right? In the traditional design of things, right? So the more we can add protection for people and the more we can add transparency, I think all of that just adds on to wider adoption, which I think benefits the industry way more than us not taking those steps.
I see. So you believe with a regulatory framework, it's going to help the mainstream adoption in expedite it?
I do. I think, look, currently when you're engaging with any crypto product, right, what is your go-to for you to decide whether or not you want to invest in that project, right? So say you want to buy tokens for a new project that's just coming onto the market, right? You go read the white paper, you look at their website, you try and figure out what the tokenomics is of the project to kind of guess if it makes sense. But none of that information that's available to you to research, to assess the risk that you're taking in that investment is anywhere is in a regulated or concise format. Like every single thing that you read is unique in its nature, right? It probably comes from the project team, so they're heavily incentivized to make the project look way more rosy than what it might be, right? So all of that inherently translates to risk to the investor. And the more we can kind of like get closer to a place where there's transparency and rules, we can get to a space where wider adoption is encouraged because people understand the risk that they're taking. And to me, I'm a risk guy, right? So I'm all about understanding what risk I'm taking, right? I think most people that's early on in crypto has kind of gotten used to the idea of, well, it's okay, I'm taking a little bit of extra risk because the returns are so handsome. But I do think it's not going to continue that way, right? The returns are gonna start dropping off pretty soon. So I think we need to evolve as the industry evolves and as regulation evolves.
I see. And how does the identity fit into the regulatory framework?
Yeah, I think that's a very good question. Look, I think it's core to regulatory framework. If you look at the FATF guidance that just came out this week, right? It looks very similar to the traditional way of doing things, right? Which is back to the core principle of understand who the individual is that you're dealing with, or understand who the institution is that you're dealing with, right? So those are the core kind of like components to FATF guidance, right? I don't think we're moving away from that traditional way of doing things, at least in a regulatory framework, unless we can come up with a proven solution that can replace that model, right? I think we'll always sit in a space where regulators would kind of default to the thing that they know and the thing that's proven to work, probably not perfectly. Well, I know not perfectly, but at least it's something, right? And until we can come up with a better solution, I think identity will always be core. Now, that said, I do think we are making significant advancements in how we deal with identity and privacy, specifically in the crypto and kind of the Web3 world, right? And I'm not talking about scanning eyeballs with orbs. I'll leave that one for a different debate. But we are taking steps, and this is not a plug, but I'll just tell you what we are doing from a Civic standpoint, right? So because we believe so firmly in this concept of trust and transparency, we are offering a free service to NFT founders who wants to come to Civic and have their identity verified by us, right? So we would go through your kind of traditional KYC steps, verify who the individuals are, that's the founders of the NFT project. We would verify that they truly own the web domain that they're selling these NFTs on. They own the Twitter handle that they do all the marketing on. We do sanctions checks, all of these traditional things. And then we communicate out to the NFT community that we verified these founders, implementing some trust around the project, because now it's not completely anonymous, unknown individuals. At least somebody knows who they are and has done some due diligence around the project, right? So we're kind of instilling trust through this identity verification process that we're doing, while at the same time ensuring that the founders can remain pseudonymous on Twitter or completely anonymous, right? So that's kind of, in a way, we're providing a service, but still protecting the privacy of those founders and those teams that don't necessarily want to be known out in the wider world.
Yeah, Chris, that's really interesting. I mean, anonymity is obviously at the ethos of what we're talking about, but counterparty risk is a real thing. And so, that was really the inception of trusted third parties in capital markets to eliminate that. So it sounds like you guys have a really strong solution, which allows for the anonymity, but also significantly reduces or maybe even eliminates that counterparty risk.
That's absolutely right. And we look at identity as a sliding scale, right? So we're building kind of the Lego piece, the identity Lego piece, to plug into the Web3 world, right? In a way where projects can decide how much of their private information do they want to give out, right? So you can go all the way from giving no information out, and we can verify that yes, you are a human being through very interesting technological ways, right? All the way to something that's going to be compliant with regulation as we know it today, right? So for us, it's a very, very broad spectrum. And I do think we'll continue to see more and more companies in this space innovate. And hopefully as we innovate and as we prove that these solutions are useful, that these solutions start kind of overtaking the traditional way of doing things, right? But I don't think it's going to be a complete replacement of the traditional system. I think it's going to have to happen in sections as is proven. We'll be able to kind of like replace the traditional way of doing things.
And how would you think this identity solution can linking into the traditional like taxation part? Because we cannot avoid talking about anything without the taxation when it comes to regulation. So Aaron, I guess that question goes to you, and how complex it is to look at the crypto regulation for taxation here.
Yeah, no, it's a great question. Thanks for asking. It's great to share the stage here and appreciate hearing your thoughts, Noah and Chris and Tobin. So it's a good question. Identity verification is very important when it comes to taxes. And if you caught me with a big smile on my face earlier, it's because I saw a ping from a colleague with some customer feedback that said, I hate taxes, but I love TaxBit. And, that sentiment is, one that most of us share. Taxes are complicated. And, the tax code, it's thousands of pages long. And so things do get very complicated very quickly. And that is certainly the case in the area of cryptocurrency. What's interesting is when it comes to cryptocurrency for tax purposes, it's really crypto property, where you're required to track the cost basis or your entry point to these assets, and then track all of your trading activity. Compare your cost basis with sales proceeds for trading activity, whether it's an actual sale into fiat of those assets or it's trading from one cryptocurrency or one crypto to another. You have to track those events and use them to determine your realized gains and losses at the end of the day. So it does become very complicated, particularly as the volumes and activity become increasingly higher. We have to do it for every single lot. Every time you enter into a new digital asset, you've got to track those things. So doing it at scale actually becomes very complicated, and it becomes very complicated very fast. So one of the things that companies do and individuals do is use tools that are available to folks. And there are good tools that are out there to automate a lot of that tracking. One of the things that makes things increasingly more complicated, despite volumes, is when you're doing cross-platform transfers. You think about if I buy tokens on a certain platform and then I transfer them to a different platform, how does that second platform know the cost basis or know what I paid for the asset on the first platform? And the answer is right now, in most cases, they don't. And it falls on you as an individual to be able to consolidate all of your trading activity, track your cost bases, even when it's across platforms, and be able to report appropriately on the ultimate realized gains and losses at the end of the day. This is something that many of us have experienced. I do a lot of my purchasing on Coinbase, but then I transfer to various other platforms for various reasons. And being able to track all that information is a challenge. So taxes, it's probably not anybody's favorite topic, but it's a really critical part of the solution, the infrastructure and ecosystem to help the digital asset community continue to thrive.
Do people actually filing for tax in America?
100% they do. This is actually getting an increasing amount of attention right now from regulators, including the IRS. For those of you who are in the crypto space, you know full well that last year on literally the front page of the 1040 you were asked a question if you had any cryptocurrency activity during the year. It's on the front page of your tax return. And that's highlighting and it's messaging to all of us how serious regulators in the IRS are taking this. And, they are educating themselves and they're looking at tools that are available to themselves to be able to make processes more efficient. And so each of us also need to make sure that we're taking advantage of those same things, and so that we can be accurate and we can, stay on solid footing, keep ourselves out of trouble. A couple of other interesting things that are happening. Many exchanges right now, they're providing 1099s to their customers. And for those that are new to this, a 1099 is essentially a report that shares your trading activity and the results of that trading activity for your digital asset activity. So it's going to show the proceeds, it's going to show your cost basis and the resulting gains and losses that you then can report on your own individual tax returns. So, this is, companies are doing this, exchanges are doing this in anticipation of that becoming a requirement at some point in the near future. This was one of the highest debated areas in the infrastructure bill that was passed in the Senate just a few months ago. So it's getting a lot of attention. Certainly people are and should be filing, including that in their filings, their annual tax returns, and regulators are paying really close attention to it. So it's important that we take it seriously and we, fill our part as good stewards in the community.
Good information to know. And Noah, I saw that you wanted to make some comments here too.
Oh, I might have come off mute. Yeah, to build on what Aaron was saying too. I think all that was obviously spot on. There's these emerging areas too. I feel like the gap between where IRS has been clear with consumers or taxpayers and where the market is just continues to grow, and it's really problematic. So, as Aaron I'm sure does, we hear from clients very frequently, right? And the emerging topics are DeFi. So some of what Aaron explained around like tracking this activity, right? These trades, what's the basis for the trade? When were you in and out and what different coins? What did you do between exchange accounts? A lot of that, you have the benefit of getting data from the centralized exchange, right? Through an API, usually, sort of hook up TaxBit, download your information. You're going to get like some 1040, a 1040 form or a taxable gain.
Yeah.
What about when you layer on?
Yeah, that's right.
Yeah. What about when you layer on decentralized finance, where you've made trades on a DEX and there's no inherent pricing in that trade on chain? There's no information around the basis of that asset. Those things become really complicated. So I know like TaxBit and smart people in the space are solving for this. But again, the space is running away. You've got IRS I think one of the most recent things I've seen that's concrete is they announced that in 2017, the hard fork from Bitcoin to Bitcoin Cash was indeed a taxable event that created income or imputed income to those who, got the benefits of that fork, the BCH that they received. I think that's, wow, groundbreaking, right? Maybe I'm going further, being a little bit more ostentatious than Aaron can, but to me, that's pretty frustrating, right? Because as someone who's trying to give clients good advice in the industry, that is just woefully behind, right? We all knew that was income. We came up with that long ago. We didn't know it was black and white concrete treatment, but that was obviously what it was. And again, now we've got DeFi, now we've got NFTs, we've got staking rewards. These things, create incredibly complex data problems, frankly, and then those are also tax problems. So yeah,
you're hitting the nail on the head, Noah. It's something that we hear from customers all the time. I've got DeFi activity. I'm now entering into liquidity pooling. I'm staking my assets. All of these things that are happening in the industry, and the industry is moving incredibly quickly right now. We need to be able to react to it. So certainly us at TaxBit, we're running really, really quickly to be able to support all of our customers' needs from a tax perspective, because there are questions that pop up, and being able to track income for staking rewards, then being able to track what are my realized gains and losses on trading activity, regardless of the platform or protocol that's coming from, becomes really important. what is also interesting to me is you think about taxes, and for so many people, taxes is very reactionary, where it's kind of like I go to the hospital, I have a procedure done, and then I spend the next 3 months just like waiting in anticipation of when the bill's going to come. And I never really know what I'm going to pay and what my obligations will be. And sometimes taxes can feel the same way. I'm waiting until March and April. I give all my paperwork to my accountant, or I use some kind of tax provider preparing software, and I'm just waiting for what that number is. And I don't really know, and it's a little bit scary. Well, what's interesting in the digital asset space, we're helping people be more strategic about their taxes. You can harvest losses, for example. They can put you in a very different tax position. They can put you in a more beneficial and more advantageous tax position than you otherwise would be in. So one of the things that we often share with our customers is think strategically. Don't feel like you're in that hospital situation where you just have to sit back and recover and wait for the bills to come. You can actually be a little bit more proactive on your part by leveraging technology providers that are out there, and be strategic in the decisions that you're making so that you can track in real time what your tax bill will be at the end of the year, and make decisions today rather than thinking about it in March next year when it's too late to make those decisions for the most part. Think about that today and be strategic today so that you can drive what your ultimate outcome will be next year when you're filing your taxes.
Well, Aaron, Noah, this all sounds great. I'm glad we have people like you guys working on this stuff. I recently bought a house and I had to do source of funds, and some of my source of funds were crypto source of funds, and just to go through that process, that was another example of where we need some guidelines and guardrails and some just something to point to say, okay, these are reasonable things to expect individuals to be investing their money in, right? So banks should be accepting these proof of funds or source of funds as valid proof. Like they wouldn't even accept Coinbase documents. And I'm like, this is a public company, so we've got a long way to go. But yeah, as I said, it's good to see you guys working on this interest. Not so fun stuff, right? But very important.
Hey, we think it's fun. Real quick, Ting, I wondered can I draw us and the audience back to this idea. You use this word regulatory framework, or this phrase regulatory framework, a couple times in relation to proof of reserves. So we're going away from taxes and identity back to proof of reserves real quick. And so I wanted to kind of address that because I think it's interesting. There's a lot to say on regulatory framework. Mm-hmm. We've seen the infrastructure bill was mentioned. We've seen the president's working group on stablecoins just dropped yesterday, I think it was. I would think of proof of reserves actually more as a self-regulatory measure right now. So just to be clear for the audience, this proof of reserves idea, again, is cypherpunk in 2014, varying levels of acceptance in the industry. There's a couple of big crypto exchanges that are doing this today, but not at super high frequency. We've started to do this with a couple of clients in a unique way, and we're pushing for more traction around this because we think we've got a neat method around it. But ultimately, I think it's a self-regulatory measure. It's not currently enshrined in anything other than, well, actually two places where you see proof of reserves. You see it in the Wyoming special depository institution, essentially state banking charter requirements. So that's essentially being a fully reserved bank with a state charter. And you also see it embedded in the New York BIT license requirements for money transmitters that deal in crypto or virtual assets, virtual currencies, as they say, in New York State. So it's sort of enshrined there, but otherwise it's a self-regulatory thing. And I think that one of the reasons it should be a self-regulatory measure in my mind is that, I guess one way to think about it is like the infrastructure of trust and transparency, I'll say, that we all rely on in our daily lives and that we probably grew up relying on without thinking much about it. It's all subterranean now, right? It's all the pipes and the sewer and the power lines that we don't even see, we don't even think about, But ultimately, yeah, we trust our bank. We trust what my banking application tells me is my balance. We place a lot of credibility in that. But why do we do that? We do that because there are regulatory frameworks. There are standards and methods, of audit reporting, for instance, is a big one. And there are regulators that place varying levels of oversight over the financial markets. And so, but the crypto markets don't have that today. They've got sort of like, I don't know, the analogies. They've got some things underground, but it's not a robust infrastructure that people can rely on. And so Chris made some of those points. But ultimately, if we believe that digital assets can be better financial instruments, we believe that they are better stores of value, they are better ways of communicating value or transferring, and maybe ultimately they might even be a unit of account, then shouldn't we, as participants, put energy into like actually doing it better, right? So, and one more example. So regulators today, if you're a crypto exchange, a lending provider, et cetera, in the US, mostly what you have to do is comply with a varying patchwork of state money transmission laws. The end result of these regulations is actually really ineffective. Like, sorry to tell you, state regulators, I'll be the first to tell you, the annual financial statement audit and the varying levels of IT compliance and maybe a capital reserve requirement, you're not doing a great job for protecting consumers when it comes to digital assets. You're just not. Why is that? One of the big areas is crypto custody. You may be holding hundreds of millions, if not billions of dollars worth of bearer-like customer assets without potentially some exchanges like Gemini have a self-insurance or reinsurance program. Others, there's varying levels of insurance. There's no FDIC layer. So yeah, consumers are exposed, frankly, but the state regulations are not meeting the measure right now. Could they meet the measure better with something like proof of reserves done in a frequent cadence and reported to state authorities? Yeah, they really could. That would be a lot better. So anyway, that's my spiel on that regulatory framework. But
no, I think you're absolutely right. I think there's an evolution needed as well within the crypto industry on this topic, right? I think you hear guys like Gary Gensler and Senator Elizabeth Warren talking about investor protection, and it feels to me that the general response in the crypto industry is an eye roll and is like, oh, stay away from our industry, don't get in here. I don't think they're wrong. I think we do need to implement controls and safeguards that's going to keep people's money safe. But to your point, I think at our core as a crypto industry, we are builders, and we need to come up with innovative solutions that we can implement the rails and stuff that sits underground, as you said, that service the industry appropriately, but that also get to investor protection, which is ultimately, I think, what the regulators want to get to. They just don't know what the right answer is to get there, and I think it's up to us to show them what those answers are. Yeah, exactly. So I think you're absolutely right. I think
look at the president's working group identifies one of the top issues, right, is essentially a consumer protection issue on the stablecoin, right? What if there's no sufficient reserves of fiat to meet the token demand, right? All of the token holders want to redeem dollars at the same time. Yep. Their solution or their recommendation is to make everybody a bank. Is that, I don't know, that seems like overkill to me. I think in that case, why aren't other money service businesses and fintech applications also need to be banks? The character is very similar, So I think that there's more focused measures that can be self-regulatory, that can be much more narrowly tailored, that can allow for the current status quo of money transmission for financial services being okay. But there's also, new things, new tools that the industry and regulators can use to get proper oversight, to get proper compliance, and to get proper protection.
Chris, I really liked what you said there, though, because in essence, I kind of boil it down to, we need to lead from the front, and we need to maintain and partner with regulators and maintain good relationships so that we can influence positively and with integrity, being good stewards of our stakeholders what's going on and how we can work together. One thing that is interesting, just as we work with the IRS and we work with other regulators, is we sense a real desire to lean in and to do what's best from the industry. And I think in some ways, that maybe hasn't always been the perception from folks in the crypto community. And it's something that we're really encouraged by, is regulators wanting to put common sense things in place that, they don't regulate the industry out of existence, but instead they give it the framework and the structure that's needed to grow and to thrive and to continue along this mainstream adoption curve that is moving very, very quickly. So that's something that we've been really, really encouraged by. And we're trying to do everything that we can to lean into those conversations and be good thought partners and thought leaders in the space.
Yeah, and that's the other positive thing to kind of like start ending this on the positive note for the crypto industry. I've been in this space for a while, but it's been dramatic, that the change in how this crypto industry is willing to accept the notion of being regulated over the past 6 months. Like it's come leaps and bounds, and I feel like we're growing up a little bit, and people are now way more open about opening up the door for regulators to come in to put these rails in place, and that's a very promising thing for me that I look at and point to say there's hope for the industry in the long term. And the more we can get people on board to kind of like slowly get comfortable with this idea, as long as it's reasonable, I think it's going to be a growing industry for a very long time, and we're going to be we're going to all benefit from it. So
Tobin, you're back, and
I'm back. Sorry.
Yes, and you're with the Digital Chamber of Commerce, and I wonder what kind of, Chris and Noah and Aaron, we've been talking about taxation, proof of reserves, and identity that can help the future trust and transparency of crypto. But you obviously also have access to other ways that can improve the trust and the transparency. So can you give us more of your insights?
Yeah, no, that's great. Thanks, Ting, and apologies for dropping there. But Chris, Noah, Aaron, they're all doing really, really good work and important work in the space. And we have a unique seat at the chamber where we sit between industry and the policymakers on the Hill and the regulators, whether, again, that's the IRS or FASB or the SEC, CFTC, et cetera. And so to the extent there are opportunities to continue to educate, to enter into, as Chris said, partnerships, and Aaron reiterated as well, partnerships with the regulators, with the policymakers. I think that's how we really move the ball down the field. We're very active, with the IRS, with FASB, with the SEC. NOAA was a huge part of our proof of reserves paper earlier this year, which is an excellent read for those of you who are interested. But we continue to have these conversations. We want to continue to support the innovators, as well as the industry as a whole, as we all again try to see the industry grow up and see the benefits here. I mean, we're talking about eventual efficiencies here that are significant to the existing systems, but they need to come with those investor protections and with that transparency that the guys have talked about.
Tobin, let me maybe just add one anecdotal thing to what you said. I used to work at the Financial Accounting Standards Board, so I've sat on that side of the table, and I can tell you from firsthand experience that that type of outreach and interaction with the broader stakeholder group is really critical to the process. I remember sitting in conversations where we were talking to investor groups, we were talking to auditor groups, we were talking to preparer groups, genuinely trying to come up with what the best solution for all stakeholder considerations would be. And so my experience, at least working at the Financial Accounting Standards Board, is that there is a real genuine interest and desire to hear from the broader community. And oftentimes outreach efforts are made, and we need to make sure that we answer the call to those outreach efforts, and we're providing the input and the feedback and allowing that collaboration to exist so that answers are created and come to that make the most sense for all industry participants. And it really results in the best outcome. Collaboration results in better outcomes than making decisions in isolation and in silos. So that's been my experience in the past. And so I think it's behooves each of us to do our parts to answer the calls for outreach when it's requested, and to be good players and participants, because it really does benefit the industry as a whole.
I'll just plug the chamber real quick too, Aaron. We've been a member as a firm for about 3 years, and if you're involved in crypto, blockchain, digital assets, and you're not also in some way involved with the chamber, you're definitely missing out. The legislative advocacy that's done is, of the highest caliber. The community is amazing. You've got the top law firms, top accounting firms in the world, and their best minds on these calls and working groups. And then, you've got this, this amazing network to draw from. Lots of like-minded people and very active work. So good stuff.
Thank you. Appreciate that.
Yeah. And just to tie it up, I'll second that, Tobin. Like the paper on proof of reserves, if people haven't read it, it's really interesting, but it's also kind of a proof again how we as an industry can be the builders here and be the designers of our own destiny, right? Looking at new tools, new techniques to kind of service similar outcomes to what we achieve in the traditional system.
Love it. Thank you, guys. I think this is a great discussion. And for me, I do agree that self-regulated framework for the crypto industry might work better than just plugging into all these traditional existing ones and try to fit into the crypto space, because it's much more complex than we anticipated. And so great to hear that the chamber and the regulators are open, allowing the innovation to continue and letting the regulation frameworks like proof of reserves to help the industry to grow in the long run. So I think it's gonna go, like you said, it's gonna stay here, this industry, and we're looking forward to what's gonna happen next. So thank you guys so much for sharing your thoughts, and hope we'll see you again.
Thanks, everybody.
Thanks.
Thank you, everybody.
Great stuff, guys. Thank you, everyone. Bye-bye.
Bye.
Bye.